Okay, good day, ladies and gentlemen. Today is the 31st day of December 2024. So by tomorrow, we are going into the new year. Happy New Year to you all, in advance. Okay, so because of the festive season, I'm going to do something special for you guys. All right, so you're going to learn something that you will be very, very glad you did learn from me today. So it's more like I'm giving you a bonus as we move into the new year. So I'll be revealing something very important that is going to help you, in your forex journey and give you, more knowledge when it comes to your trading arsenal. Okay, so all you need for this trading system is just two time frames. Okay, so you have to pay attention. You need just two time frames for this particular trading system. Okay, the very first time frame is the 15 minutes time frame. So you're going to be utilizing the 15M, and the other time frame is the 5M time frame. So 15 minutes to 5 minutes, very simple. So what will you be using the 15 minutes for? 15 minutes is going to be like your higher time frame. So this is like a scalping strategy. So you don't need to go to bigger time frames like daily. Just use this 15 minutes and 5 minutes, okay? So the 15 minutes is like your higher time frame, what's it called? It's gonna be a higher time frame. Then you're gonna use that for your buyers, okay? While the 5 minutes time frame is going to be for your entry. So how do you go about that? This Let me go to 15 minutes, okay? So this is the 15 minutes time frame right now. So when you get to the 15 minutes time frame, all you need to do is you can zoom out and look, get a feel of where the price is going to. As you can see, right now we are like in a downtrend. Why did I say that? You can see the way price is pushing down right now. Okay, so uh, this is a downtrend. Then you can zoom in and start looking at the structure. Okay, you just want to determine your bias from the higher time frame. So you start looking for the most recent break of structure towards the downside, and this is it right here. Okay, this is the most recent break of structure because this low was broken, right, by these candles that moved in this direction. Okay, so what you have before you is current price action. Okay, so break of structure was to the downside because this low was taken out, right? So what you now do from here is you can put an horizontal line on the low that got broken, which is this low right here. Okay, this low is the last low that got broken, right? You can put an horizontal line there just to have an idea of, okay, this is where price broke and all of that. Then you go to your 5 minute time frame to look for your entry. Okay, so now we are in the 5 minutes time frame. Okay, so on the 5 minutes time frame, you can see this is the low that price broke right here. So this is the low price broke. Price came down, broke that low, and right now price is trading below that low. Okay, and it's just retesting that level. But guess what? Price retesting this level, But let's assume that price is somewhere here. It just broke this low, retesting the level. You have no business with that. So the very first thing is bias, and that bias is determined by you going to the 15 minutes time frame and looking for, the current trend, and then you search for the last BOS. Okay, you search for the last BOS in the direction of the trend you have determined. Those are the two things you are doing on the 15 minutes time frame. So now that you're on the 5 minutes time frame, you're going to be looking for your points of interest. Okay, so your point of interest can be order blocks and fair value gaps, which price is going to come back into. We already know it has broken structure. As it has broken structure, you would expect a retracement into one of these POIs, which is going to be an order block or a fair value gap. Now, the problem with that is that when you look along the leg that actually broke structure, okay, when you look along this leg that actually broke structure from this point to this point where structure got broken, you would notice that you're going to have a lot of you're going to have more than one fair value gap. Okay, so you could have a fair value gap here, another fair value gap here, another fair value gap here, an order block here, all of that. That brings confusion to beginner traders. You don't know where exactly price wants to retrace to. Okay, you don't know if it's the first fair value gap or it's the second one. Now that leads us to the next step. The next step is you get your Fibonacci retracement tool. Okay, you fib from the top of that move that broke structure to the bottom, like this. Okay, here's the swing point. Let me anchor it on the swing point. Okay, let's say right here. Okay, so that's the swing point. Fine. So when you anchor it on the swing point from the swing high to this swing low that we have down here, okay, so swing high to this swing low is what I measured. Okay, so you look for the 50% of that aggressive move that broke structure, the 50% level, you look for it. Let me zoom out a bit so I can see. Okay, so this is my 50% level right here. Can you see the 50% level? If you want to use the system, you can decide to, not add all these other values of the Fibonacci retracement. Just have 100, 50, and then 0. Okay, you can do that so that it will be clearer to you. But I don't like changing my Fibonacci retracement settings. So what I do instead is I get an horizontal line and place it on the 50% level right here. Okay, place an horizontal line on the 50% level right here. Okay, then I can now delete my Fibonacci retracement. The idea, what I'm driving at, so that you get an understanding of why I'm doing what I'm doing. Okay, anything below this 50% level, right, it's what we call the discount region. Okay, this is discount. Then above the 50% is what we call premium. So when you want to sell, it is wise to sell when price is very high and to buy when price is very cheap. Okay, so when you're trying to sell, once you mark out this 50% level, anything above is premium, so you're gonna sell from the premium. Okay, assuming we are trying to buy, okay, we are going to try to buy below the 50%, which is the discount area. Okay, so we buy at the discount, then price moves up and puts us in profit. Okay, so I'm going to delete my Fibonacci. I already have, I think I deleted something else, but let me delete this Fibonacci. Okay, so this is my 50% what? This is my 50% line. Okay, so anything above is premium. So now I have succeeded in reducing the confusion of which PD array am I going to use. Okay, which point of interest am I going to use? Because anything below this, I have no business with that. So if there's a fair value gap somewhere or an order block somewhere here, it's none of my business. Okay, that's for the early sellers who are going to be taking out when price actually does the main move into the premium region. Okay, so right here I can see this order block clearly seated here, which is nice. This one order block, also this region also serves as a region price could get to. You can see there's another order block right here. Now we still have 2 order blocks in the premium region. So what are you going to do right now? So 2 order blocks are qualified for price to trade into. We have this one right here, we have this one also right here. So what you do in this case now is to look for the one that is mitigated and the one that is unmitigated. The unmitigated one is the one that price will pull to. Can you see the knowledge I'm giving you now? The unmitigated one is the one price will pull to. There will always be one that is yet to be mitigated, and that is this one that is right here. So this current price action, you are going to see that price, if price will retrace up to this point, it's going to sell crazily. Okay, so why did I disqualify this one? I'll show you. Let me get another horizontal line. If I mark out the boundary of this one, another horizontal line. Okay, so if I mark out the boundary of this one right here, what do you see playing out? See, price broke below that level, right, but retested it with this bullish candle. So this one is already mitigated. Price has no business going there. But if you look at the second one, let me mark out the boundary of that second order block. Look at the second one right here now. Okay, when price broke below it, it pushed. It didn't retrace with any bullish candle coming in to tap into it. So it is untapped, which is what we call unmitigated. It is fresh and solid and nice. Okay, so basically you're done. Just wait for price to return here, and then you can take your trade from here. For those of you that want to be super conservative, when price gets here, you can go to your 1 minute time frame and look for a market structure shift to the downside. But I think that's stressful. This 5 minute time frame, your stop loss is not going to be too big, so just place a pending order somewhere here, stop loss a few pips above this level, and then you can target a conservative 1 to 2, or you can just go for the next draw on liquidity. You look for the next swing that price would want to break, okay, which is definitely whatever low it's trying to put in before pushing up. That's going to be the next draw on liquidity, because price move from external liquidity to internal liquidity, then back to external liquidity. All right, so basically that's just all I want to teach you, and I hope you've learned one or two extra stuff that adds to your trading arsenal. All right, so if you're a new viewer, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.